Good morning everyone. I am Dr. H.S. Kumawat from Department of ABST, SPC Government College, अजमेर। हम देख रहे हैं सिक्योरिटी एनालिसिस एंड पोर्टफोलियो मैनेजमेंट, जिसके अंतर्गत आज हम देखेंगे इन्वेस्टमेंट्स। व्हाट इज़ द इन्वेस्टमेंट्स, व्हाट आर द फीचर्स ऑफ इन्वेस्टमेंट्स, रियल असेट्स versus financial assets and objectives of investments। जो हमारे पास एक्स्ट्रा मनी होती है उसको हम कुछ रिटर्न के बदले कहीं डिपॉजिट करवा देते हैं, तो उसको हम बोलेंगे इन्वेस्टमेंट। बाय इन्वेस्टिंग एन इन्वेस्टर commits the present funds to one or more assets to be held for some time in expectation of some future return in the form of interest or capital gains. If an investor purchases the shares of company today and sell it at higher price in future, it is an investment. Purchase of a property for letting it out for rental income is also an investment. So, in any investment, there are three features, that is time, expected rate of inflation, and uncertainty of return. Time means for which an investment which could have been spent right now but were not consumed and postponed for consumption on later date has been made with the hope that funds accrued at time will be more than what it was at time. The next is expected rate of inflation. Growth of money takes place over time when the money invested becomes more than what we invested now. For example, money in FD, fixed deposits, become more in few years, but the inflation deflates its value over these years. Also, inflation works in a direction opposite to the growth of money. So, as a result of inflation, the expected rate of return comes down. Now, the next point is, next feature, or we can say next aspects, is uncertainty of return. It means risk involved when we defer the consumption by few years. It may happen that actual return after time may be less than expected return. So risk means uncertainty of return. Now we understand the real assets and financial assets. By the real assets, we mean the assets like land, buildings, plant and machinery, which are also called tangible assets, which can be used to produce goods and provide the services. These can be movable or immovable, marketable or non-marketable assets. These assets, it can be seen, contribute directly to the productive capacity of an economy. Financial assets may fall under categories like equity shares, equity claims, means bonds and mutual funds, loans and deposits. So, we understand the real assets are land, buildings, plant and machinery, etc. And the financial assets are equity shares, bonds, mutual funds, loans and deposits. What are the objectives of investment? In a nutshell, we can say minimize the risk and maximizing the returns. The main motto, main objective of the investment is minimize the risk and maximizing the returns. Risk tolerance of the investor, how much the risk an investor can tolerate. So, the main objective of investment process is to minimize the risk and maximizing the returns from the investment. The investor's objective is to seek increase in the current wealth by tapping various investment opportunities. For this purpose, an investor may keep in mind that there are certain securities like government securities which have low risk, and the other hand there are also securities, shares of corporate entities which have high risk, because their returns are dependent upon many factors which cannot be controlled. Normally, an investor will like to go in for higher risk security only when they expect higher return from it. Inflation, as we know, deflates the value of an investment. Investors who are equally concerned with the effect of inflation on investments make an investment with an objective to provide hedge or protection against inflation over time. No investor will like that the future cash value of an asset held by him even goes below its present cash value on account of rise in prices or inflation. For some investors, the objective of an investment made is to avail themselves of the tax incentive schemes offered by the government. Now, in the other words, we can say the objective is to reduce the tax burden, which they are otherwise required to pay to the government as tax. Normally, this is resorted to as a short-term objective by an investor. In a nutshell, we can say the main objective of investments are minimize the risk and maximizing the returns. In the next class, we understand characteristics of investment like return, risk, liquidity, safety, time horizon, tax aspects of investments. And also, we see at present the characteristics of investment, return. For any investor, expected return from an investment is most important, be in the form of income or in the form of capital appreciation. Some investments such as land, buildings, equity shares provide an opportunity of capital appreciation, while investments like fixed deposits, debentures or bonds do not provide this opportunity. Investments like FD, debenture, bonds may provide income in the form of regular interest payments. The next characteristic is risk. Normally, risk is always associated with return. It has been seen that higher risk, higher expected return. While investments like government securities, bank deposits are almost without risk. Other investments may have risk of varying degree. Different factors contribute to the risk. For example, investments having shorter maturity period may generally have lower risk, while investments which have longer maturity period have higher risk. The next is liquidity. Investment can be converted into the cash at a price approximately to its fair market value. In other words, sell it or market it. If an investment is liquid, it is possible for an investor to exit the same and get back his money quickly. Liquidity becomes an important factor to be considered if an investor is likely to face an emergency situation wherein he may require funds immediately. Now the next is safety. Every investor expects that he will at least get back his initial capital on maturity. For example, investors consider their investment made in securities issued by the government as safe and not safe when it is invested in private enterprise. Preference shares is considered safe in comparison to equity shares. The another characteristic is time horizon. Depending upon the liquidity needs of an investor, as also the risks involved, an investor sets his time horizon. Investors who need lesser liquidity and can bear higher risk may go in for a higher time horizon. And the next is tax aspects. For some investors, tax saving become an important characteristic for investment purpose. Also, under income tax laws, capital gains or capital losses are taxed differently than income. For example, investment in public provident fund has tax benefits in initial investment. Return from investment like interest accrued and maturity money. Thank you.